All right, hey everybody, TG here. I think we got everything up and running. So yeah, let's get into it. It is January 19th, Wednesday morning. And yeah, if you guys have any questions, if anybody's new here and wants to know more information about me, you come over here to profitpilot.com and you can dive into the services area. And then I got a bunch of newsletters that I like to write about in through here. So let's get over to the market. Let me see if I get the right one. There we go. That's what I was looking for. Yep, I got audio visual up. Let me get that. Okay, I think we good. I think I just got reconnected. So if I can get like a thumbs up in the chat. Want to make sure that we are. I think we're good. I think we got everything reconnected. So you guys let me know that we are reconnected in the chat. Give me a thumbs up or an okay or something. Okay, I think we are good and okay. So let's see. Loco no Joko. There you go. Thanks, Imran. Loco no Joko is saying that maybe there is going to be a dead cat balance after the let's see, options expiry Friday. So this would go into kind of the pit bull low concept that is out there, and I do see potential. So if we look at this, and I don't know how big the bounce is going to be, but I do think that there's going to be some sort of either bounce or reversion to the mean. What I called out to my subscribers this morning was that price is starting to pull away from the daily 8 EMA. So there is starting to become a bit of a gap between here. And so when you see that gap, it's like, okay, price gonna come back up at some point. The question is just how much. I've got a couple examples that I want to show about that too. And then if we look here at the S&P, you guys can see I drew in a couple trend lines. There was one that connected kind of in through here, and then you can see we're breaking it already. But then I was like, okay, well, let's take a look at another one. So here, actually to the low there, and we're sitting right there. So we're going to have to see if that actually holds. And then the other area of support that I'm looking at, trying to see, okay, what's going to be the last path that we get there with is, if you look, we've been basically riding the weekly 21 as we narrow the distance between that 8 and 21 here, and we are sitting right on it, on the weekly 21. It's looking kind of weak to me. It's actually starting to put some heavy weight through it as we continue to just sit here and erode the strength of the weekly 21. Now, of course, Loco no Joke, I was just saying, yeah, there could definitely be a bounce. The question is, is this bounce going to be the best shorting opportunity? It might be. I would be careful about that, and that's what I'd be looking for. This market is just not looking good. And if we see this, we can see that the daily 50 is starting to kind of arc over, and we can even see that the hourly 200 is starting to arc over too. Now, what I don't know is, is price going to go beyond it, and will that become an inverse trampoline move like that, or is price going to go exactly to it and then roll over like that? So that is something we need to look for, and I would be saying at this point we need to start looking at shorting the rips, not necessarily buying the dips. I think the market has, well, we've been seeing this thing change for several months, but I think the indexes and the leaders and the big names are starting to actually get in line with that. And if we look at the Nasdaq, we can see that it, on a relative basis, is much weaker than the S&P. Now, what I like to do is also kind of look around and see if there are multiple things kind of talking to me at the same time. As far as the S&P, looking like it wants to break below the weekly 21, but that it might bounce first. The way we can look at that is, you can see here, let's get my cursor right down here, we had price hit the weekly 21, bounce up, and then it came back down to the weekly 21, and now it's breaking the weekly 21. That is a possible path that could happen with the S&P. You can kind of see here, up and over like that. Now, I think that the bounces are going to get weaker and weaker. So, Loco no Joko, I think that's something that we need to consider, that sure, there might be a bounce, but I don't know if it's going to be, maybe if you're kind of very short-term trading or down on the lower time frame, you can play some shorter-term stuff like that. But I would be looking at, bounces are probably going to get weaker and weaker and weaker, kind of like that. So be careful, because that's what we've been seeing. We've seen up and then down and down and down, and whatever kind of bounce might continue to be weak. You can really see the daily 50 are starting to arc over here, and you can really see the hourly 200 angled down as well, and the Moxie indicator on the hourly chart is very, very low, and the daily Moxie indicator is very, very low as well. Maybe another area, a reason we could be seeing price bounce is that the Nasdaq is at the lower third ATR, and it is coming into previous support here at the daily 200. Now, one other thing to consider, I was looking around at this morning, and if we go back to the SPY, but we look at the ES, let's get the computer working here. I've been asking a lot of my laptop lately, so let's see how much time this thing is going to take in order to load. There we go. All right, so if we look at the ES futures, and I always find it interesting when you're on Thinkorswim, loading the futures actually takes a little bit longer than just loading an ETF. I know there's more data and stuff like that, but I'm actually kind of surprised that there's just such a stark difference anytime you want to look at futures versus regular trading hours. So if we come in here, and what I want to show you on the weekly chart, I'm letting the computer keep catching up here, is that you can see I have a gray line already drawn in from the previous high. Now I've had that line drawn in for several weeks, and what I noticed today in the overnight that price came right down to it and basically bounced right off the top of that previous high. You can see it, that I'm waiting for my thing to be able to zoom in here. It's just kind of frozen, so I'm going to get off of the futures as soon as my computer comes back online. So that, and then we can also see that price, again for the futures, is bouncing off of the weekly 21, but if you look at the overnight action, it did actually puncture the weekly 21 and went below it and then came back up. So, again, it's trying to, it seems to be weakening those moving averages that are trying to hold the market up right now. All right, there we go. Let's move off from the futures, since that doesn't seem to be a happy spot. And if we go over to the UVXY, and we come over here to, let's see, a different time frame, I want to show you that I'm seeing some similarities. The UVXY is building to the long side compared to the market. So, if you're looking through here, this is a typical setup that I talk about where the 50 starts getting closer and closer to the 200, and then it's able to cross, and that's the bull move. And you can see we're getting the same thing. The 50 is getting closer and closer to the 200, and it's looking like it's wanting to cross. Now, if we look at the previous example in through here, there is definitely the potential, like, loco no joco, if you're right, if we get a bounce, what do you think the UVXY is going to do? Probably going to come back down to the hourly 50, right? Because right now the UVXY is kind of up here. And so if we then take a look at where we are currently, what do we got? The UVXY is moving up, but it is running into the 200, and the 50 is not quite angled up, and there is still a gap here between price and the hourly 50. So there is definitely the possibility that price could come down like this and then back up like that. And if that happens, I'm going to be buying right in through there. So adding to the UVXY position. If we go over to the IWM, we know that this is the weakest sector of all of them. And it is breaking. It is now really, really breaking areas. I've had these lines drawn in for a very long time too. You can see here that I have these two lines, and price has basically stayed in those two frames for those two lines for a very long time. And look at this. We are now breaking below that. So watch out below. Watch out below. That's kind of the name of the game right now. And if we look here on the hourly chart, daily chart for the IWM, you can see price ran right smack into the underside of the daily 50, and it ran right smack into the underside of the hourly 50 with the Moxie indicator below 0. Now remember, market's always a tricky place. So a lot of people are seeing, oh yeah, that's breaking. That's low. It's low. Let's get low. And the people who aren't new to this, they might be thinking, oh yeah, we just broke that low, let's get short. And that might be a place, but I also would not be surprised if that is a bit of an undercut and we actually see price move up like that. And so there should be another opportunity to get short on something like this if you're interested in getting short. Now, the areas that I was talking about of strength is gold. And I've been talking about this one for quite some time, and we are in gold related position. It's doing well. And even last week I was talking about this. This was a great pullback right there into the hourly 50. The Moxie indicator still above zero. I mean, this is textbook. That was absolutely perfect. And other than kind of some messiness right in through here, gold has actually been doing pretty well. We've got the 50, 250 maneuver right there, and then we've got price over the 50 for the first move, and the second move was the pullback into the 50. Perfect. This is really doing quite well, and you can see that there's some good strength in there today. The Moxie indicator has been above zero on the daily chart for a very long time, and so you can see that this was a trampoline move on the daily chart. We had a trampoline move and another trampoline move, and now we're moving up like this. So this has been doing really well. We've got squeezes all over the place, and you can see here that price has been starting to work its way over the weekly 50 with everything pretty much lined up. You know, come in here, and if we open this thing up, you can see my dad and I refer to it as the pitchfork. Look at all these moving averages here. They converge, and now we've got them all starting to expand and move up like that. So gold looks to be like a pretty good place. You know, silver is probably the second runner-up compared to that for the precious metals. And then, you know, if we talk about USO, you know, what I want to see here, USO oil seems to be also the place of strength. That seems about the only other place of strength. Now, remember, I talked about this a long while ago. There was a big gap back here on the weekly chart that you could see. And where did price run into and get halted the last time? Right smack at the bottom of that gap, right? Well, now what are we doing? We're actually breaking through into that gap. Oftentimes, when something is able to actually break into that gap, it will transition to the other side of the gap. It almost just gets sucked across. It's like, okay, if you're gonna cross that gap, you better get to the other side. And so let me kind of put a line here and see where that is. So maybe something like right there. And it looks to me like that also lines up. I love the market for this. This is the amazing stuff about the market. You know, if you didn't know about this gap over here, wouldn't you think that probably the weekly 200 is going to be resistance because of that moving average? How amazing is it that not only does the bottom or the top of that gap also line up with that moving average? And so as we traverse this gap, it is most likely that price is probably going to go right to that as a magnet and also resistance, right to that the 200 and that line that I drew as the top of that gap. Love it. I love it when stuff like that works out. Some of the other areas, OIH. And what we can see here is, you know, this is looking fairly good. This is looking pretty good. Now, it wasn't something I wanted to buy back here because it's been extended, so I would like to see some sort of either pullback or consolidation. You know, probably a pullback to the 21 would be my initial guess. So yeah, I don't really want to be buying it right up and through here as it keeps hitting this top. I'd love to see just a little bit of a dip and then like that. And doesn't this look good? Double bottom in through here. You can see double bottom, positive divergence. Here's your trampoline move on the hourly. Yeah, this all looks pretty good, but just don't be surprised that there's going to be probably a little bit of a pullback and a dip. It might coincide with the market. You know, we'll have to see. XOP, kind of another one, another ETF in that sector. And this was I was looking for a little bit of a pullback too, and you can see here right at this top, you know, third ATR, stuff like that. We are getting a little bit of a pullback, so I want to be looking for a place to re-enter on that on a little bit of a dip. And then let's see. KRE, the banks, has been another area of some strength, but they too were overbought and looking like they could use a bit of a pullback. And so here, as I was talking about, oil is an example of the pullback that I'm looking at. I mean, look at this thing. It was pretty extended, had a really good move to the upside, started hitting that third ATR, started pulling away from all the moving averages, and what did it do? It's coming back down to the daily 21 as it breaks through the hourly 50. So this is the kind of pullback that I would be looking for and expecting in the oil sector, and it's starting to show up in KRE as an example. All right, so let's look at NVIDIA. So ZL, if you want to be shorting it, I'm not sure I would be shorting it right this moment. And I do also have a hard time shorting some of the biggest high flyers. I don't think that that's the best place to try and short something because a lot of people are going to be defending it. I know tech is probably going to be getting hit and is going to be an area of weakness because tech, they go up like rockets and they fall like rocks. So yeah, you wouldn't be wrong for trying to tackle these things since they are pretty extended, but I'd be looking for a better opportunity. I know that this is starting to break the weekly 21, but I'm not sure I'd like to be buying or shorting it right here. I'd much rather be shorting it somewhere up here where I can see that something is actually happening, or right here as price is running into the underside of these moving averages. I would say I don't want to be shorting at the lows, just like I wouldn't want to be buying at the highs. I don't want to be buying here or buying here. I want to be buying here. And so the same thing is true for shorts, just opposite. I don't want to be shorting here. I want to be shorting here or here. So I would wait for an opportunity, and the market always moves. It's up, down, up, down, up, down. Yeah, the trend might be up, the trend might be down, but within that there are bounces and cycles and stuff. So I really would be looking for an opportunity. If you wanted to short NVIDIA, look for an opportunity, and that opportunity would generally be a bounce of some sort. Now, another thing we can look at, so you guys can kind of just see the overall weakness of the market. Here is Amazon, and what do you see that's different? What's calling your attention? Right here, right? We've had price holding the weekly 50 pretty well, right? Even up and through here, and now what? We have a breaking the weekly 50. Moxie indicator very much below zero. Yeah, we're starting to see some problems. The leaders are starting to break down a bit. How about Apple? It's been a pretty good leader, but it's also overbought, kind of like NVIDIA. What's the deal here? Outside of that third ATR. In fact, I made a call and a post to my subscribers right here. That's why I have that arrow. I said, how much longer do you think Apple is going to be able to sustain this? I mean, it's gone nearly vertical, and I even pointed out that it popped outside of the weekly third ATR. And you can see there was a big gap between price and the daily 50 and all this stuff. And that's exactly why I had that arrow, to call that out and say, you better watch out to the upside. And then if you look here on the hourly, right and through here, that price came up here, did a double top, and you notice the inverse trampoline move on the hourly chart. Now, I do remember a few of my subscribers and we were kind of talking about this, and some of them are saying, hey, can we buy it here? And I said, only if you're short-term, trading, because I didn't like that the hourly 50 was in a downtrend and the Moxie indicator was below zero. I said, I can't quite confirm that this is an uptrend. So if you guys were shorter term, you could have taken maybe a three-day trade, something like that, to the upside. But this was a pretty tough longer-term swing because, well, there's your top. And then notice that all of this time that price was over the hourly 50, notice what the Moxie indicator was doing. It was staying below zero. That is an inverse trampoline move. That was telling me that this thing was not likely to go up. And the crazier thing, if you look at this is why I love the Moxie indicator, and this is how it helps me trade. Notice that right here we had higher high on Apple, and we actually had a lower high on the Moxie indicator. Not to even mention that the indicator was below zero. So higher high on price, lower high on the indicator, that's negative divergence. That is telling you that something's wrong here. And then what we could see here, that gap between price and the daily 50, at some point price is going to come back down here. And we could also see leg, heel, arch of the foot, ball of the foot, elf toe. It was an inverse elf shoe, for those of you who know my patterns and setups and stuff like that. So if we get over to Google and we come in through here, what are we seeing? Look at all of this inverse trampoline move on the daily chart. This is some big stuff. This is some really, really big stuff. This is powerful. These are higher time frames, these are really telling us something. If you look at Google, what's happening? We're breaking the weekly 21. Now, going back to what Loco No Joko and I were talking about, that there might be a bounce. Yeah, there might be a bounce. Why? Well, if you look at the daily chart, just like I think Nasdaq, we're coming into the daily 200. It's going to be an area of support. This is another thing I was telling my subscribers, like, hey, you know, you got to look out for the tree branches below you. Like, this is why trying to short high-flying stocks or short an uptrend can be tough, because they first they take a long time to transition out of an uptrend, because you know it's a big ship and it's going to take a long time for them to change directions. And the other thing is you've got support, you've got support, and you've got support, and then you know from whatever price level you have support, and then there's another price level and another price level. And what do you think is going to happen when price is starting to go down? It's going to get defended, and it's going to get defended, and it's going to get defended, and it's going to get defended. So, you know, that's not to say that price can't keep going down, but you have to remember what the mechanism is going on is that every time you hit that tree branch of support, you're either going to slow down or you're going to bounce. And sometimes those bounces can be pretty wicked, because think about it. You guys know this. In a bear market, some of the biggest up moves are in a bear market during downtrends, because short covering and short squeezes. That's why. So just remember that when you guys are trading this, look for levels that price is likely to stop or hold up, and then you know either watch out for that bounce, because I know a lot of you guys like to trade options, and if you get caught in a short squeeze on an option, you're gonna probably give back all of your gains on something like that. So with options, you got to make sure you get out on the way in the direction you're going before it ever bounces. Yeah, JTD F-shoe pattern never gets old, does it? So yeah, and then AMD, I was looking at this one too. You know, it's going to be, I think AMD is going to be basically following NVIDIA. Now, there might be a bounce because NVIDIA is here at the weekly 21, but I would be concerned. I'm seriously concerned. How strong is that bounce going to be? That bounce might actually just kind of be like this before it rolls over like that. You know, we might get a little bit of bounce and then it rolls over. And watch out for earnings. Anything can happen for earnings. And if we look here on the daily and then the hourly, we were in this and it didn't work for what I wanted it to, but I needed to make sure I salvaged as much of the trade as I could. And so when we got, you know, price kept going down and okay, it's eventually going to bounce. You know, I was looking at that weekly 21 is going to bounce, and it did bounce. But when it came into here, into that inverse trampoline move and that downtrending hourly 50, I was like, this is probably going to be as good as I get. So let's just take that and get out there. And you can also see it ran right into the daily 21. So it was those things that I looked at and said, yeah, I think we need to be moving on and passing from this. Now, SLI, this is lithium, and what I want to show you is the lack of a bounce, or just a visual of what to prepare yourself for, say AMD, NVIDIA, like whatever, Google, anything that's kind of trying to bounce here. Because look at this. Here's price generally trying to hold the weekly 21. And what do we get? You get one bounce, and then what? You know, straight down. This is what I'm trying to point out. This is what I'm trying to caution. This is what you guys need to be looking for, and this is what you need to make sure you see, so that if you're trading the long sign, you don't get suckered into something like this, because you might be looking like leg, heel, arch of the foot, ball of the foot, elf toe, and you're like, yeah, cool, look at that double bottom, it held, it's moving up, you know, it's starting to get price holding the hourly 50, like everything looks great, and then the next thing you know, you get destroyed, and you're trying to figure out like what the heck happened. Well, context, you know, context. This market is weak. This market is seriously weak. And what happened? Price ran right smack into the underside of a down arcing daily 50 with the Moxie indicator below zero, and price fell off of the weekly 21. So start looking for this situation, what's going on out there. All right, because I think that, you know, Loco no Joko, as we're talking, yeah, what if there is a bounce? Well, it might actually be more lucrative to short that bounce eventually. So keep that in mind when you start seeing things, that if they start bouncing, be careful. You got to look up. If you're going long, you better look up and see if there's anything going on. JTD, let's see, U.UN. I actually don't know this one. Yeah, I didn't think that was going to work. How about we try URA for uranium? We can also do, I'm trying to think the other uranium tickers. I think I covered this last week, and I was cautious because yes, if you look here on the weekly chart, it did bounce at the weekly 50 before, and we were right there, and you can see it bounced off the 200, and here we are sitting at the 200. But we need to be careful because it worked before, but I think it might be different this time. Might be different, and so far I think I'm being proven correct that this time is different, and I'm not so sure that this is going to be something bullish. I think these things are actually going to be weak. If we look at this, we have price running into the underside of a daily 50, whereas before price was able to really get through that. Like, you got to notice there's something different here. And on the hourly chart, notice that price keeps getting rejected by a downtrending hourly 200, and notice that we are starting to break lower from that area. We are starting to break below the daily 50 or the daily 200. And as far as the weekly chart, I don't know. I think it's probably a matter of time until price breaks below this. It might chop around a little bit, but I'd be careful about it going lower. So if you're trying to trade uranium higher, just watch out for that. So far, I don't see a long. I really just don't see a long on anything like that. All right, CCK, ZL. Let's take a look at that. I know this one we're trying to probably, looking for defense. And yeah, this is looking fairly decent. Fairly decent. Weekly chart has been holding the weekly 50 pretty well. It does look like it's trying to make new highs. It's been holding the weekly 21 in there too. And if we look here on the daily chart, it's had a couple of false, moves up here. But yeah, this one's looking pretty good. One thing I will point out, when I teach about the Moxie indicator, there's one thing I talk about where it's the Moxie indicator fires late, which is basically like the tail wagging the dog. And what you can see is, notice here how the Moxie indicator fires green halfway through that move up. Notice how the Moxie indicator here fires halfway through that move up. Same thing here. Notice how the Moxie indicator fires halfway through that move up. It's firing late. It is not firing right at the time that price is starting to move. But now look here. What do we got? You guys see now how the Moxie indicator is firing exactly right at where price comes in and starts holding that moving average and looks nice and coiled. Doesn't that look different? Doesn't that look great? If you guys really study this, doesn't this, even just from a price standpoint, look much better than this or this? Yeah, it looks really good. Because what you can see is before, look at that gap. Look at that gap. Do you see a gap here? No. That looks pretty good. So, let's see, who was that? ZL? Yeah, good call on this one. If you guys are starting to look for some defensive stocks, this thing looks like it's an area to hang out. And you can see here, this was a trampoline move on the hourly chart. So yeah, CCK, and then I'm trying to think of the other one. There are a few in this, like Tower. I forget the ticker of the Tower one. But yeah, that one's looking very interesting. So there are areas of strength. Money has got to go someplace. We've got a lot of money out there. We've got a lot of firms. We've got a lot of investment companies. And they have to be in the market, to a certain extent. And so they are trying to find places to hide. They're trying to find places that probably pay dividends. They're finding places that have been around for 100 years and aren't going to go away during a recession. Their money is trying to hide. So keep that in mind when you start looking for places to put your money. You got to go where money is hiding. So yeah, CCK, Tower, I forget the other ones that are like that. Start looking for areas of defense. I think that is the name of the game, unless you want to start shorting some stuff. All right, guys. Well, thanks again. Good time chatting with you. And yeah, if you have any questions, come over here at profitpilot.com. Check out services. That's how you can reach out to us. And yeah, we'll see you next week. Enjoy.